Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss this week in the market, some taxes updates, the revenge of the Roth, and slapping breakouts in a hot market.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity of Dips,
And Hugh Henny.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Wednesday, November the 3rd, and the market is just continuously hot. I mean, you're seeing ranges, you're seeing sympathies, you're seeing fluff news still get like 15% pops and they stay. You're seeing the 100% runners. We may have not have seen as many 100% runners this week, but I mean, you're still at the point where you're seeing some just ridiculous moves. It's hard to be read in this market sometimes as long as you're still playing, and kind of smart.
Kind of what we're seeing, like we saw earlier inside the year, is that we're seeing a big disconnect and we're seeing that range inside SPY, but that's not really carrying over for other stocks. We see Tesla, obviously, but Tesla broke out.
Hit over 1,200, yeah. Over 10% on a Monday for the largest large cap.
Yeah, exactly. So we're seeing like a bigger disconnect away from everything's following SPY really closely. And in doing so, small caps, with algos have turned on, small caps have just been absolutely insane. And instead of there being like that downward pull and that downward pressure, you can feel the buying and the nature that these small caps are feeling right now. They felt this like downward pressure for so many months, and then now you're just seeing so much inflow into these small caps. And part of that is probably, obviously it's because of the algorithms, but part of it is also all it really takes is like a DWAC to bring more traders into the market. What do they want to trade? Do they want to trade Apple, or do they want to trade something that can get that moves quicker and has higher upside? Of course, they want to go for the higher upside. So you're feeling this I'm seeing things halt from just single market buys. Like that's how much inflow is coming into the market. So it's a really cool thing. Like I said, it's kind of what we've seen earlier in the year. And honestly, I think that this melt up just continues across the board. Because one, from a technical standpoint, everything looks really healthy. And from the catalyst standpoint, I really don't see anything, like interest rates rise. I really don't see that through the end of the year. So maybe I do see a pullback. I think we need a pullback sometime in November, maybe maybe about 100 points. And then I think that we can go higher and really get to that 470 level. And but that being said, overall, that downward pressure that everything felt for months is now seeing the exact opposite, where the entire Russell is just up. Most small caps are just up 2-3% every single day.
Yeah, no, you're still seeing it. The ones that do pop and they have their drop and they may maintain a higher low, or they may even go back to where they started. It doesn't seem like they're breaking down any further, which I think is finally that comfort zone we can all get into. And if it does drop further, then these buying opportunities are just beyond good. Because you see the action now. I mean, they're just amazing on them all. Is all those those months of down pressure finally relieved, and now it's almost like smooth sailing.
No, exactly, and that's exactly what we were saying was that, listen, when it's cold, it's really cold. It's blistering. There's so many less opportunities. Things aren't going so far. Now we're seeing things with price targets go 130%, which is just wild. So it just comes back to what we talked about Sunday and what we talk about all the time is that when it's hot, you got to press it, and when it's cold, I mean, you just got to chill. I truly think that next year I should just take off the summer months, because when you get into these, I mean, you can see for anybody watching, you can see the bags underneath my eyes, but I love it. I love it. Like, I love the amount of opportunities. I mean, you could genuinely find 40 or 50 opportunities every day. And I mean, like, quality opportunities across the board. And it's awesome. Like, that is awesome, because then it comes down to, if you make a watch list the night before and then in the morning you come back and based on that watch list, you kind of narrow it down a little bit to what looks like the best edge. And then even you can narrow it down one more time so that pool that you're grabbing from, although you're narrowing it down, not only are you lowering the amount on your watch list, but you're also increasing, like the better opportunities, like the ones that you're keeping on are the better opportunities. Where it feels like 3-4 months ago, you had 10 or 11 opportunities every day across the board, but when you narrowed down that watch list, you only had 2 or 3 really good moves. So it's really awesome to see. But again, always be important, always be reactive, because if again the faucet does turn off on most of the stuff, then that's when the true catastrophic losses come in, because you get in there heavy, maybe you 5x your account, you're all emotional once you start to lose, you revenge trade, and then all of a sudden you're down 50% of your account.
Yeah, because the thing is, when the market gets super hot and it's green, your first red day after all that is going to be a big one, numerically a lot bigger than what you're used to, solely because your account's so much bigger. And that I think is one of the things that shocks people the most.
Yeah, exactly. And I mean, it's so much what they say about emotions with this game. And that's another part of it that most people don't even think about, because why would you? One of the things that I think makes Zach Morris so good was his ability to scale. He truly, I remember when him and I would be pretty close to P&Ls, and then all of a sudden it was like I was sizing up accordingly, like 10-20% of my position, and he was able to mentally take on a double a starter, a triple a starter, and he was able to compound that much faster because he was able to do that. I just wasn't ready for that, and that's fine. I just wasn't ready for that. But I think that part of his growth, of why he was able to pull away from so many traders during the COVID times, was because his ability to scale.
Yeah, I mean, you're seeing it now with a lot of these that just adding on the dips whenever he's saying like, oh, it's under here. And sure enough, ones that he'd been kind of high on were CNTX and CYN that he's been consistently just adding the dips on. And what happens today? One gets a patent, and then CNTX gets the news on pre-market. Like, I mean, these new IPOs are going to have to start dropping news eventually.
Well, because when you think about this theme, they're coming to the market. The management teams aren't stupid. And if they are stupid, most of the time, anyone that's bringing them public, or any investor relations team, is going to tell them, hey, listen, you gave the S1, you gave the prospectus, you got this far, at least within the first 6 months, give investors, give shareholders something to hold on to. There's a few reasons for that. One of them being people that have founding member shares, most of the time, their lockup period isn't that long. So, give them a reason to hold. Because most of these guys get shares at, let's call it $1, $1.30, hell, sometimes under $1. If they IPO at like $10, $15 a share, most of those guys want to lock in that profit. So if you go 5 or 6 months without any updates, and you go 5 or 6 months without giving them any other reason to hold, they're just going to sell. And all that's going to do is, it comes down to supply and demand. They're just going to dump it on the market, and what do they care if they get filled $1 lower? They just want to lock in that good profit. So it comes back to, they're coming onto the market for a reason. Most I'll say most shops are going to want them to have something inside the pipeline and something to look forward to. That's why like an S1 or a prospectus is so important when you're digging through IPOs, because most of those little nuggets, similar to an investor relations standpoint and similar to an investor deck, it'll tell you what's coming up. Like the S1 is everything about the company. So there's little nuggets in there. And then again, on top of that, you want the founders to hold, because especially like if I'm looking at something, the first thing that I go to is how much of the company is held by insiders. How much has the insiders sold inside the past 5 years? Stuff like that all plays into it. And so you want your founders, the people that have the founder shares to hold. All
right, well, going forward in a hot market, I know this isn't something you'd ever do in some slow market, obviously, but slapping breakouts. If you have a big enough account, maybe causing the breakout by, if there's a big wall at 2, you cause it. You see the wall's 50,000 shares. You're like, okay, well, I wanted to put $100,000 in here anyways. Here we go. How do you recommend doing that? Let's say for the smaller account guys, you see it finally break that 2, then you get in at the 201, 202. Or if you're the guy that can break it, I mean, in a hot market, what does that entail? What risk does that involve that, buying at support or something may not provide?
Yeah. So this comes back to Larry. Again, we're going to continue, just like we tried to prepare for a hot market, now that we're inside the hot market, we're going to prepare for the cold market. Just because preparation is everything inside this game. And again, when it does become cold, that's when people are going to lose 50% of their accounts. And as we're talking about right now, breakout trades are working. Most of the time, if something's breaking out on resistance, we're seeing it not just pop and drop. We're seeing that resistance point now become support, and we're seeing this stock go so much further. Okay? Now, bringing it back into it, when it does get cold, we'll see false breakouts. And so what ends up happening is that you end up slapping the breakout. Let's say the breakout's at 12. You end up slapping the breakout at 12. Let's just say you get an average fill of 1202. It hangs up out there, and then you see a red knife candle. Okay, now it's back at 1155. You're buying more because inside this current market, that's what's working. And then it goes down to 1120. Now you're almost full account sized, and it's at 1120.
It's only down 10%, not even.
And you're in full size because what's working right now is just buying any dip on these breakout stocks. If they're even failing the breakout, which most of them right now are not failing the breakout. And that's how you get in trouble quick, because if this thing goes to 10, now your entire account I'm not going to say in jeopardy, but your entire account is starting to get chopped up. So if you are going to buy the breakouts, there's a few things. One, treat your breakout like a smaller starter. What this is going to enable you to do is that if this goes further than if it goes further and it continues to break out, then what this is going to do is that on a dip from that level, you can then scale in. So let's just say it breaks resistance point, it shoots up, like I said, that resistance point is 12, it shoots up to 1230. If it dips back down to that 1205, 1210 area, that's where you can buy that dip, if it's holding support. But let's just say that it does break down. Now, if you only have 2 or 3% of your account in, fine, that's all you're risking. But again, if it holds that support and it starts to show confirmation of holding that level, that's when you can scale in. And that's how I personally like to play the breakouts, because in my experience, right now, yes, the breakouts are working, but when the breakouts stop working, it's not like the market makers put up a big red sign saying, breakouts aren't going to work next week. They just stop working, and all of a sudden you get fucked. So again, but if your starter's 5% of your account, your breakout starter should be 3% of your account or less, half of what your actual starter is. And then once it truly does show support and it's holding that key level, that's when you can buy, that's when you can scale in. Every stock dips. Okay, every single stock dips. There will be another opportunity. And even if you're buying higher than what you originally wanted, that's okay, because at the end of the day, it's showing you confirmation, and you're able to have more confidence inside that trade.
So let's say, you get that perfect breakout buy, you get lucky in this market, you get that 12, you get that 1202, and it starts going up. The stock's now at 1255. Are you waiting until it starts showing signs of failure to sell, or when are you taking profits? Obviously, in this market, the sky's the limit, and you don't want to get off the train 3 stops too early.
Yeah, no, definitely. And so that's why it is super important to still have a plan inside this market. Like, it still can't be like the wild, wild west, like, just buying breakouts and on the whim of things, like that's working right now, but it's still important to have a plan because I'll use the same example that we just talked about. The way, let's just say our stock is at 12, it's breaking out, we hit 1230, you scale in at 1210. It's now curling back up. You still have confidence inside that trade. The 2 things to note are going to be what's the next resistance point, and is that daily resistance? What kind of resistance is that? And then on top of that, I know a lot of people shit on the RSI, but I personally love the RSI, especially when I'm trading something and I just kind of want to know where it's at, because if the RSI is approaching 90, if the RSI is approaching 95, that's when I'm like, okay, let me take half off the table, because at that point it's basically saying we need to pull back. It's healthy to pull back, so I can sell some, and then on a pullback, that's when I can even buy back part of my position, and if not all of my positions sometimes. So the big thing is that most of the time it's going to be a reactive move. Like usually I would say sell some at resistance and still sell some at resistance. But for the most part, for me, it's going to be based on a reactive move. So if I see like let's just say that the stock's been soaking all day, it hits a new high a day and it starts to really extend out. Next, if I see a big share exchange, let's say 10, 15 million notional, then that's when I know that's, okay, somebody's trying to get out of this stock. I'm going to be in front of them, and so that's the only sell. Maybe it goes higher, but at least at this bare minimum, I can lock some in. I'm a big fan inside any market, but especially this market, of trading around that core, because even if it only dips a little bit and it doesn't even dip back to support, you can grab some of that, and you can grab some of that, and you can trade around that core. And sometimes if you're trading 2,000 or 3,000 shares, some of these tickers are trading so liquid and so much that sometimes they're moving $1 or $2 a share on 1,000, 2,000 shares. That's the difference of like $4,000 or $5,000, where usually they would only trade maybe 30, 40, 50 cents. So a lot of these stocks are having this huge range, and you can capitalize on that.
All right, well, going forward, it is November. End of the year's coming. Couple months we got left. And I know everyone hates talking about these godforsaken things, but taxes. You want to kind of get a head start on it. There are some things you can do to write off before the end of the year for your trading setups. Just lots of stuff like that. November, the end of the year's coming. What are you kind of doing to start, if you're not on quarterly taxes, to kind of get into it, to get ahead of the game?
Yeah, so the one thing that I will say is that it's super important to hire a CPA. Listen,
because we're not CPAs, and this is not tax advice.
Yeah, we are certainly not CPAs. But that being said, there are a lot of a CPA is worth the investment. A really good CPA is going to be worth the investment inside my experience. All I've found is that every single good CPA has been worth the investment. Now, as far as taxes go, listen, if it sounds too good to be true, it probably is. There are tons of sketchy ways out there that a lot of people try and get around taxes. At the end of the day, just pay your taxes. Yes, there's little ways to knick-knack here and there, but if someone's telling you that it's like, hey, I know a way that you only pay 7% of taxes, and you live in New York, California, that's too good to be true. Okay,
you're committing tax fraud.
Yeah, you're committing tax fraud. So one of the ways is it's Hugh, I know this buddy who knows a buddy who has a CPA who was talking about this.
Logan Paul lives in Costa Rica now, Puerto Rico.
Just pay your taxes. Just just pay your taxes. Okay, at the end of the day, just pay your taxes. Don't get yourself into trouble because tax evasion you can land yourself in prison with, like, who is it, Martha Stewart or something, or
Al Capone.
Who's that famous? Yeah, Al Capone, the famous mobster. You know, he was allegedly killing people.
Hitler. The IRS got Hitler. They said he was gonna win World War II if the IRS didn't show up at his door. Alexander the Great didn't pay his taxes. That's what took him down. I'm trying to think. There's a couple others I know, but I just can't think of them off the top of my head. But yeah, it's taken on a lot of people.
But my point is that for the same reason, like, people go to jail for committing tax fraud. Like Uncle Sam don't fuck around like with their taxes. Like, at the end of the day, like, you will owe, and on top of the penalties and fines, you'll owe interest. So it's not worth it. At the end of the day, it's not worth it. It's just not worth it. Now, as far as like the little knick-knacking that you can do, it really isn't anything crazy. It's just understanding what you can write off and what is important. So one of the biggest things that a lot of people forget is if you're a trader, all of the education that you use, okay, all of the resources that you use, you can write off. So like, I think I have like $30,000 or $40,000 in subscriptions every year between scanners, news, buying different computers and different software, this microphone, everything that you use on a daily basis for your work is expendable. Also, it's important to note that, I also don't think that you should, I see this on Twitter where it's like, I'm doing this for my taxes this year. What my CPA tells me, and again, we're not tax professionals, is that it's never good to just do something for tax reasons unless you're over like 15, 20 million a year. If you're over that, then yeah, you can
don't go start opening hotels that fail.
Yeah. Like, that's literally like what I see. Like I have to spend $6 million inside the next 2 months to escape taxes. Like, that just sounds that sounds stupid. Like, at the end of the day, like it just sounds stupid. Unless you're doing 15, 20 million to where it's like you have a team, like, okay, fine, do your thing. But at the end of the day, if you're making $1 million or less, you should not be going to buy homes and buying houses just for the purpose of taxes. Okay? Because at the end of the day, more taxes are a good thing. Like, they are a good thing. Okay? At the end of the day, if you have to pay $2 million in taxes and you didn't evade taxes, it's a good thing. That means you made a lot of money. So again, the next thing that we want to talk about is a little bit less about how to avoid taxes and more about the only way that you can really screw this up is if you try and use your tax money. So I'm saying what you owe in taxes, and you lose that money.
Yeah,
okay?
When January starts, start realizing all that money in your TDA is not all fucking yours.
It's not all, exactly. In fact, just take 40% away, especially depending on the state you live in. Okay? The worst thing that you can do for your account is try and compound gains and end up losing more. Okay? So please, 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 if you are someone who, you do not have good risk management, maybe you have a little bit of a gambler side in you, you like to take risks, do me a favor now and take 35% of your account out and put it inside your bank account or
put
a
it
separate
inside your
account.
DraftKings account.
Yeah, because at the end of the day, this game is about longevity, and that is truly the only way that you can screw it up. And what I mean by that is that not only screwing it up by losing money, but as we just talked about, scaling and emotions is a big part of this. So if you have, let's just say you have $1 million inside your account, and you owe the IRS $400,000, and you lose $300,000 on top of the $400,000 that you need to pay taxes on. This means that you now only have, like $300,000 to work with. So now your account just got cut in a third. So now, if you don't cut down your starter, everything that used to be 1% is now 3%. A 1% loss is now 3% loss. A 10% loss is now a 30% loss. And that's really going to mess with your head. So please, 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 if you're newer to this game, especially if you've had a hot last 2 weeks, 3 weeks, 3 months, please just take out 35% of your account, put it inside your bank account. Hell, you can make an early payment. That's fine. Just do something so that it's not there. And even if you have great risk management, you need to be the type of person that says, okay, if I have $1 million account and I know that I owe 40% of this to the IRS and you want to use that money, that's fine. But have a stop loss on your account. So what I mean by that is that if you have $1 million, you owe 400,000.
Don't let it go below 900K because that 400K is now it's $500,000.
Exactly. And even if you go up to 1.5 million, have a stop loss. 1.4, I'm taking the 400 out. It's fine. And honestly, what you should do, and this is what I suggest a lot of people do, is that if you have that $1 million account and you owe 400,000 and you have a $100,000 a day, that should go into your bank account. You should just keep your account at that $1 million, and every day the money that you make above that $1 million should just be automatically exit to your account. You'll see that over the next month, over the next 2 months, you'll see that if you do that, you're always starting with $1 million. So you
by
can
the time
keep
April
your
15th comes, your bank account and your TDA is going to be looking good.
It's going to be looking good. You can pay your taxes. Your starters don't change. It's going to be great.
All right. So last thing on taxes before we move on to our last two little segments. Little game, and y'all can correct us in the comments if you guys notice any of them are wrong. You give me a yes or no on if I can write it off. Phone bill.
Well, I mean, is this just like you're just purely like a trader? I think so. I think part of
you
like
can
your
write off
bill,
your cell phone bill.
You can write off, but don't you
Because
need to use it like 50% or more for business? Isn't
I
that
mean,
the
you
rule?
make trades on it, man. I trade a lot on
I
my
don't make
phone,
trades
so.
on my phone.
Well, damn. I guess
Sure,
you're
I hope
writing
I
it
didn't
off.
write off. Oh, damn.
Oh,
Just
shit.
kidding, IRS.
Okay, I went to a silent auction for charity and bought a Mike Tyson signed Mike Tyson Punch-Out picture.
Yeah.
Okay, sweet. That's gone. 1 second, I'm looking around. The
Computer,
20% of my apartment I use for trading.
Yeah.
Okay. My keyboard.
Yeah.
Okay. My Adderall.
Do you get it from a drug dealer or do you get it from a doctor?
Get it from a doctor, a pharmacy.
I didn't know if it was like, John.
No. I'm prescribed. So I'm taking that as a yes. My gym membership.
I mean, if you actually go, I think you need to meet a certain. I think like most of the stuff, you need to meet a certain requirement. But yeah.
So our answer on these are probably Google them or ask your tax professional.
Yeah, this is why we hire people because we don't know.
No, dude. And literally last year I made roughly like $100K during like the super hot market, and I only had to pay my accountant $500. So I mean, like, for what it was, I mean, like that was. It was, I wasn't using TurboTax again. Like, I was not going to afford fucking up. Like, I had, Robinhood, TDA, Cash App, Webull, all these things. Like, it's not worth it. You download them, send them to your boy or girl, and they'll get them done. So two things. I'll do one before the other because I know Roth's had a victory this week. But before that, so this week, as we all know, the show Squid Games came out with a cryptocurrency, and oh boy, was this one wild. Here, listen to these prices. At 1:35 in the morning, it is worth $38. At 2:35 in the morning, it is worth $89. At 3:35 in the morning, it is worth $93. So keep in mind, these are all hour increments. 4:35 in the morning, it's worth $434. 5:35 in the morning, get this, $2,856. 5 minutes later, it is worth $0.00079 cents. It is worth 8/1000th of a cent in 5 minutes. Is that the biggest rug pull ever?
Yeah, so this is why I think the headline came out on Friday that Congress is trying to speed a bill to regulate some of these coins and some of this nonsense. Because I mean, every week it feels like we're having these coins and crap, like just the owners and the operators and the creators just walk away with millions of dollars. Does it say how much volume was on that coin?
I don't know, but I didn't check.
I mean, it's millions of dollars. I know it's millions of dollars.
No, the scammers made off with, I think it was $2.1 million, and some guy that makes really good YouTube videos, Some Ordinary Gamers, has more of an in-depth one on it. But quite a.
But it's crazy because this is like the I think the reason that this one got attention was because it was Squid Games and that guy that went viral screaming about it. But my point is that that's not even this happens every week to different coins, and I mean 2.1 million is on the lower end of the ones I've seen, which is just wild to me. So I think it's important to note that, listen, if you guys are trading that, it's absolutely insane. Regulation will come, and when regulation obviously regulation takes a long time, I get that. But when regulation does come, it's going to be one of those things where, probably the entire shitcoin, altcoin, whatever you call it, sector just gets hit hard.
They're probably going to have registration shit, fees, and just have them all be registered.
Put something else on the SEC's plate. Yeah. Put something else on their plate. Yeah. So I mean, and I don't know how they do that, but it will come. So
it's going to be the FDCA, the Food Drug Crypto Administration. They're going to be in charge of this.
It's just such a shame.
It's because you got to think, a year ago, so many people were into this technology. Yeah. I mean, a year ago, just because it was a little bit before, it was basically Bitcoin, Ethereum, and Litecoin or whatever the other one was. But now, I mean, there's just so much, and it's just people seem to be. I mean, obviously, everyone's still on the technology, but right now, it's such a gray area of what the hell's going on, and just sticking to what you know, or partying close to the door for some of these.
Yeah, exactly. Well, that's the thing is that, it sucked everybody in because I think it was even Willie Meat Sauce made 10,000% on some coin or something or whatever, turned $1 or $8 or something into $8,000, something crazy like that. So he made a few thousand%. So, and so it sucked everybody in, and then all of a sudden you saw all these creators and all these coins just being complete scams, and it sucks. I mean, it sucks to see, but all we can do is educate, and if you are going to do some of those coins, and you want to have some fun with your buddies and throw $20 into it.
Dude, to everyone that is offering a crypto class, including the people pretending to be us on Instagram, I think their main thing is just get in early, because that seems to be the key to all cryptocurrencies. You get them all when they're 0.0008, and you hope they go to 0.008. Last but not least, and I saved this for last because I can just leave whenever he does this. Roth IRAs. The Democrats did some stuff, and apparently you are not as upset anymore.
Yeah. So effectively, they left the backdoor Roth out of the bill, and honestly, so I'm a little surprised that they left it out. Because I thought that they would at least leave it in and then vote against it. But I mean, I'm stoked about it because all this means is that I can continue to contribute to the Roth IRA, through that backdoor, even if I make too much money. And it's a beautiful thing because, and here's the thing, and this is selfish because at the end of the day, most of Congress uses the backdoor Roth. I mean, literally when you look at the numbers, the staggering numbers, I mean, Pelosi's worth a few $100 million. Even SEC's Gensler, he's worth $60 million. All these people still use the same tricks that they claim to, not want and not, be useful to the rich anymore. So at the end of the day, a lot of it was all talk. That's what we thought. And but I did think that it would be included in the bill and just shot down later. So hey, let's go Roths, let's go backdoor, and
honestly, more years of Roths.
4 more years of Ross. And I'd be shocked if they ever did something with this, because I just don't think it's possible. You know, it's not like you're able to contribute a crazy amount of money. Maybe they bring the contribution amount down, but like overall, you know, a big win for the Roth boys, for the Roth gang.
All right, guys. Well, that sums up this episode. And make sure to rate us 5 stars, and we'll see you next week.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.